Did you know that in 2025, the economic landscape is set to reward those who know where to invest? Now, imagine being one of those people who seizes the right opportunities and gets rich over the next few years. What would you do with your money if you knew the best choices to multiply it? Today, I'm going to show you the three best investments to build wealth in 2025. These investments have everything it takes to put you on the path to financial freedom. And the best part, you can start now with any amount, even as little as $100. After years of helping people make smart financial decisions, I can confidently say these are the most promising investments right now. By the end of this video, you'll know exactly how to start without wasting time or money. Many people today feel like they work hard but can't see the financial returns they want. They hustle, save, but still their money doesn't grow the way it should. And that brings up the question, why does this happen? The problem is most people don't know where to put their money, so it actually works for them. They leave it in savings accounts, buy low return investments, or simply don't have a solid strategy. That's a huge missed opportunity. But here's the good news. In 2025, the economic climate offers huge opportunities for those who know what they're doing. The market is changing, and investments that once seemed out of reach are now accessible to anyone. The key is being in the right place at the right time. And that's exactly what I'm going to show you today. Opportunities that can multiply your money in a solid and consistent way if you know where to invest. I've prepared the top 3 investments for 2025, and you'll discover how to take advantage of them. Before we dive into the specific investments, it's important to understand what makes a good investment in 2025. After all, the key to financial success is choosing where to put your money wisely. And that requires understanding 3 essential criteria. 1, profitability. The goal of any investment is to make your money grow. In 2025, it's possible to find investments offering higher returns than historical averages. This means you can earn more than just inflation or savings account interest. 2, safety. While profitability is important, safety can't be overlooked. The idea is to have investments that, even with some risk, still offer some protection for your capital. Investments that can generate consistent profits without putting your money at excessive risk. 3, appreciation potential. The 2025 landscape is filled with new opportunities. Sectors like technology, renewable energy, and artificial intelligence (AI) have even more growth potential. Investing in these sectors might be the key to exceptional results. Now that you know what to look for in a good investment, let's talk about the 3 best investments for 2025, starting with the first, disruptive companies. When we talk about disruptive companies, we mean businesses that are changing the way industries operate. They don't follow traditional rules. They create new ways of doing business, transforming markets, and adding value for consumers. This is the type of company you should focus on if you want to invest with an eye on the future. Sectors like AI, renewable energy, and technology are booming. Companies leading these fields are becoming giants, offering profit opportunities for those who know where to invest. For example, NVIDIA, which was once a niche player in the graphics card market, has seen its value skyrocket by over 500% in recent years. What drove this surge? The rise of AI. NVIDIA is now one of the leaders in the AI sector, providing essential hardware for the development of AI, one of the world's largest innovation focuses. So how can you start investing in this type of company? The first tip is to focus on ETFs, exchange-traded funds, which bundle together shares of companies from the same sector, like AI or renewable energy. This allows you to diversify and reduce risk since you're not investing in just one company, but several that are all heading in the same direction. Another way to invest is by buying shares directly from promising companies. For this, you need to do thorough research on the companies, understand the markets they operate in, and keep an eye on trends. It's important to remember that, like any investment, investing in disruptive companies involves risk. The value can fluctuate, but the potential for substantial gains over the long term is very high. The key to success here is to invest gradually, rather than betting everything on a single stock. So, the first investment to consider in 2025 is precisely this. companies that are shaping the future and dominating new industries. If you invest now, it could be one of the best decisions you've ever made. If you're looking for a way to generate passive income and ensure a steady cash flow without physically buying properties, real estate investment trusts, REITs, are an excellent option. And when we talk about real estate in the US, the opportunities are even more attractive. REITs allow you to invest in the real estate market in a simple and accessible way. By investing in a REIT, you're purchasing shares of a fund that owns properties, and you receive a portion of the profits generated from the rent of these properties, all without having to worry about property management. Additionally, many REITs, both in the US and abroad, distribute monthly dividends, making this investment an excellent source of passive income. But what about the international market? The US real estate market continues to be one of the most stable and profitable in the world. By investing in US REITs, you can access a diversified portfolio of commercial, residential, and industrial properties without having to buy properties directly. The advantage of investing in the US is that the American real estate market is much more accessible, and many REITs have a consistent track record of profitability and appreciation over the years. How can you get started? Here are some tips. Research REITs with a solid performance history and efficient management. Some REITs focus on specific areas such as commercial properties in major cities or logistics properties, which can increase the appreciation potential. Diversify across different types of funds. By investing in various sectors of the real estate market, you minimize risk and can benefit from the appreciation of multiple areas. Pay attention to dividend distribution. Most REITs distribute their profits regularly, making them an excellent way to generate passive income while your money continues to grow. Investing in real estate without having to buy physical property is undoubtedly one of the most effective ways to generate stable returns and achieve your financial goals. And in 2025, this strategy is more accessible than ever, with numerous REITs available. Now, if you're looking for an investment that combines safety and profitability, high-yield fixed income is an excellent option for 2025. The idea here is to invest in financial products that offer returns higher than savings accounts, but with the comfort of controlled risk. And the best part? There are several options for those who want to diversify and achieve good returns, even in a challenging economic environment. First, let's talk about Treasury inflation-protected securities, TIPS, one of the most interesting fixed income products. TIPS are government bonds that offer a return tied to inflation, CPI, plus a fixed interest rate. This means that when you invest in them, your money grows according to inflation, and you secure a real return above inflation, which is crucial for protecting your purchasing power over time. In addition, there are high-yield CDs, certificates of deposit offered by banks, which have become increasingly attractive. Many banks offer CDs with rates above 100% of the benchmark, providing better returns compared to savings accounts or conservative funds. The advantage of a CD is that it's insured by the EIC, Federal Deposit Insurance Corporation, which means your investment is protected up to $250,000 per institution, even in the event of a bank failure. Another great option is corporate bonds, particularly those issued by large U.S. companies. These bonds offer more attractive fixed returns and are a good alternative for those looking to balance risk. The advantage is that these investments can generate interesting returns, especially for those seeking international diversification. The key to a good fixed income investment is choosing products with attractive returns and safety while protecting yourself from inflation. These investments offer much-needed stability in times of economic volatility. With higher returns and more controlled risk, fixed income remains a solid choice for those seeking growth with safety, especially if you have a long-term perspective. Now I want to talk about the most important investment of all, investing in yourself. You can have the best financial investments in the world, but if you don't invest in your own growth and development, it will be difficult to fully capitalize on the opportunities that come your way. The truth is, the more you invest in your skills and knowledge, the more you can increase your earning potential. So, what does it mean to invest in yourself? It means learning new skills, acquiring new knowledge, and expanding your network. In today's world, those who have a solid network and in-demand skills, such as investment management, digital marketing, or programming, are far ahead in the race for opportunities. For example, you can invest in online courses, such as those offered on platforms like Udemy, Coursera, or LinkedIn Learning. These courses are accessible and cover everything from technical skills like data analysis to personal development like leadership and productivity. Additionally, invest in mentorships or coaches who can help accelerate your learning and achieve your goals faster. These individuals can provide valuable insights into the market and help you avoid costly mistakes. Investing in yourself can have an exponential return because the knowledge and skills you acquire never depreciate. In fact, they tend to appreciate over time, increasing your opportunities for financial growth. Before wrapping up, it's important to discuss common mistakes that can lead to losing money when investing. Often, a lack of experience or the rush to see quick results leads to poor financial choices. Here are the most common mistakes you should avoid. 1. Not diversifying your investments. Putting all your money into a single asset can be very risky. Even if you find a stock or fund with great potential, if all your money is tied up in it, you could end up putting your financial security at risk. Diversification is essential to reduce risks and maximize long-term gains. 2. Ignoring transaction costs. Many new investors don't realize how brokerage fees, management fees, and taxes can affect their returns. Always check all the costs involved before investing to understand how they can impact your profits. 3. Wanting quick gains. The mindset of wanting rapid results can lead you to invest in fads or high-risk assets without proper analysis. Investing with a long-term mentality is crucial for financial success. 4. Fear of losing money. The fear of losing money can paralyze you, preventing you from taking action. Remember, the investment market involves risks, but long-term strategies are key to minimizing losses and ensuring consistent results. Avoiding these mistakes is a crucial step in ensuring your investments are successful in 2025. Now that you know the top investments for 2025 and the mistakes to avoid, it's important to understand how to diversify your investments without sacrificing performance. Diversification is one of the most powerful strategies to protect your portfolio and ensure steady growth over time. The main idea behind diversification is not putting all your eggs in one basket, but how do you do this without compromising your investment returns? Here are some tips. 1. Combine different types of assets. Instead of just investing in stocks or fixed income, try combining assets that behave differently in various economic scenarios. For example, you could have technology company stocks, real estate investment funds, REITs, and fixed income securities like Treasury inflation protected securities, TIPS, or CDs. Number 2, invest across different sectors and geographies. Diversification isn't limited to asset types. You can also invest in different sectors of the economy like technology, healthcare, and renewable energy, and even in international markets like US REITs or global funds. This reduces risks related to crises or downturns in specific sectors. 3. Rebalance your portfolio regularly. Diversifying alone isn't enough if you don't monitor your investments over time. Make adjustments as needed to maintain performance and ensure your portfolio continues to align with your financial goals. Smart diversification allows you to reduce risk without sacrificing growth potential. When done correctly, it helps you find the perfect balance between security and profitability. Now, you might be asking, how much should I invest? And if you don't have much money to start with, the good news is that you don't have to wait to begin investing. In 2025, it's possible to start with low amounts like $50 or even $100 and still see good results in the future. The key is to invest regularly. Starting small is perfectly fine, as the most important thing is simply starting. Investment platforms today offer low-cost funds and ETFs that allow you to invest simply and affordably without the need for large initial amounts. So, the advice here is start with what you can, but don't wait. As your confidence and knowledge grow, you can increase the amounts you invest, always keeping the focus on the long term. Now that we've explored the top investments 2025, it's clear that the secret to financial success lies in choosing the right opportunities, diversifying, and most importantly, being disciplined. By investing in disruptive companies, real estate funds, and high yield fixed income, you can build a solid foundation for your financial future. But remember, investing is a continuous process, and starting as soon as possible is key. It doesn't matter if you have little money right now. The important thing is to take that first step. Consistency and patience will bring great rewards over time. If you found these tips useful, like the video, subscribe to the channel, and leave a comment telling us which of these investments you're going to explore right now. And remember, the journey to financial freedom starts today. The time to act is now. Start investing and build your future.